All right, so here we are. It is May 18th. First of all, I cannot believe that it is already May 18th. This is the third Wednesday of the month, so that means it's our monthly momentum Thursday. I can't remember if that's what we actually call it. I think that's what we're calling it. I think I saw that somewhere. And this is when we often have updates from our Crown Capital team. So that's Lori, Joan, Cheri, and myself. Now, Joan is in Ottawa tonight. She sends her regrets, but she'll be back soon. And she's been looking at a really cool mobile home park in Campbell River, which we just got the numbers for. So Stefan, you and I have some homework to do. We'll look at those numbers. But Lori's here, which is awesome. It's always nice to see Lori. And Lori and I were at the UDI luncheon yesterday, which was all about affordable housing. So we heard from BC Housing, we heard from, and Lori, you might be able to help me out here if my brain stops. We heard from BC Housing, CMHC, and
Chard Development, yeah.
Kind of the developer who was in the middle of talking about what BC Housing offers and what CMHC offers, their new programs. They were talking about how a lot of the programs are stackable. So basically there are ways to get up to 100% financing for new builds, especially rentals. So yeah, very interesting. The interest rates have gone up a little bit from what they were a couple of years ago. But everybody's talking about the supply increase in the market. And the delays, and there was a lot of talk between the group about how the processes at the municipal level really have to change. And we know that that's, a problem all across Canada. It seems to be particularly bad in Victoria. The Victoria Council in particular seems to be pretty bad. And Oak Bay is notorious for being terrible. Lori, anything you want to add about the UDI yesterday? Anything that stood out for you? Or
no, I mean, they just kind of talked about what everybody's talking about is inflation increasing, interest rates increasing, the supply chain problems. There are obviously some challenging times right now, but I think they're trying to be creative with how they can still find ways to finance projects. And they're talking about, you're probably going to have to start to look at collaborating and partnering on some of these bigger projects to make them work, because I think developers are not going to be able to do it on their own with the way that the economy is and where it's heading. So no, it was an interesting topic for sure. And I'm on the board of the Greater Victoria Housing Society, so we had a table there as well. And I mean, I just speaking from the Greater Victoria Housing Society's situation, I know that they're, we are in challenging times and probably looking at halting a project right now because it's just, rates with the way things are. So it's interesting times, but I think it's just a matter of how you can work around, be a bit more creative. And I think we're going to start to see a lot more partnerships and collaborating to get through this. So it was a good topic.
Yeah, and I'm sure we're going to be talking about that with Cheri tonight, but definitely before we jump into that, the whole collaboration partnership, when you are talking to large nonprofit organizations who are trying to provide, it was interesting, they challenged us on using the word affordable and shifted to, we should actually be using attainable, because affordable has that connotation of it's only for low income family. But attainable is housing for people who are, single people who are making $120,000 a year are still having problems getting into the market in places like Victoria. So the interesting idea was we have to make housing attainable, and the public-private partnerships are going to be, more encouraged. And we're all about collaborating here, so that's nothing new to us. So it'll be really interesting to see, as we've been, talking about the creative solutions that come out of this, the collaborations, the creative partnerships, the, how can the government offset something, or give us a delay in something at the development level or the GST level, and instead of charging us GST up front, for example, on a new building, amortize it over a longer period of time. A couple of the other things with some of the CMHC programs, their amortization period for some of their building loans are up to 50 years. So that really changes the cash flow availability when you're building a building and you have an amortization of 50 years instead of 30. So yeah, lots of interesting things. UDI is a good organization in terms of, it stands for Urban Development Institute, for those of you who may not know, and it's is it international? I think it's international. I mean, it's certainly national. It may be international, but it's, you know, everything to do with construction, housing, development from the advocacy level, associations, government, and all of that kind of stuff. So good to go there and have a chat and listen to what was going on. So a couple of dates, and Julia's here and Cheri's here. So this is good that we're talking about some of these dates. Oh, and Jeff is here. So Jeff's gonna learn about all the date changes that I'm throwing at him, because we sat down today with the calendar and thought we had it all sorted out, but now we're throwing all those out the window. Okay, so for your calendars, let's give you a couple of dates and then we'll pass it over to Cheri. So May 25th is the last Wednesday of the month. So that's always when we do our Members Connect. So that's when you guys get a chance to tell us what you're looking for, struggling with, celebrating, wanting to jump into. So, you know, bring opportunities, bring situations, bring that Edmonton deal that everybody's looking at right now. You know, somebody should get that under contract and we can have a look at it together on May 25th. So that's next week. Then June 1st, we are going to change things up a little bit. Instead of doing a regular cash flow crunch, we are going to have a private lending session. So there are so many people who have been asking about becoming private lenders and accessing private lending. And so Julia is going to share with us her knowledge about private lending, and our lawyer, Stuart Ross, is also going to come in and share his information about private lending from the legal standpoint. And so that's going to be June 1st. So instead of cash flow crunch, you know, I mean, it kind of falls into cash flow, because if you're talking about cash flow and you're going with private lending, then it's good to understand how that works and how that affects your cash flow, and how it's just another number, right? Whether you're paying 8% or 16%, if the numbers work, don't get caught up in the interest rate. So that's June 1st. June, what's the next one we've got here? My scribbles are a little bit crazy here. June the 8th is our regular happy hour in Victoria. June the 15th, we are just working on which guest speaker we're going to bring in for next month. Cheri, Joan, Lori, and I will confirm that for you. June 22nd is going to be a bit of an exciting session. Anybody interested in Portugal? For all of us, Carol's like, yay, more Portugal. Julia, more Portugal. So Julia is going to be in Portugal, and she has met another wonderful person who has got lots of knowledge to share with us. So we've been talking with Eddie a lot, and we all know that Julia has been getting ready to head over to Portugal. So she has wrangled a colleague of hers, and we're going to do a session about Portugal. So there's 5 or 6 of us going over this year. There's lots of interest in Portugal. We want to keep that momentum going. So that is June 22nd, and that's going to be at 9 a.m. PST. So rather than doing an evening session, we're going to do a morning session. So lots of changes coming at everybody. I'll make sure that we have all the links updated. So we've got that. And Cheri, what day did we decide on? July 13th. So we decided we're going to do a live workshop session. So you know how we used to like get together at the Gorgevale Golf Club and the Langara in the golf club in Vancouver, wherever that other place is. We're going to do a little bit of an information session, because we've been doing the happy hours to just kind of ease us back into socializing. And I know, you know, where people are looking for a little bit more kind of next level education. So we're going to have a live session, and we will host that at the Business Center in Langford. And so we'll have more information for you on that.
Guys, is that a daytime or an evening session?
We decided it was going to be
Evening.
evening, so it was going to be like 6:30 to 8:30 kind of thing, with a little bit of, you know, happy networking time before, and we'll probably end up going for a beverage afterwards. So that'll be July 6th. And I think that's
No, July 13th.
or July 13th. We were so many dates today. So it's possible that I've missed a couple, but never fear. We'll have them all on the calendar. So on the WREN website, on the calendar, they will be there, and then they'll all be listed with all of the links on the members dashboard. And I've also just done an updated video about the dashboard. So for those of you who haven't been in there yet, that will probably be on the dashboard. The updated video will be available for everybody probably by the middle of next week. So I think that's it for dates. I guess we could probably also just remind everybody that yes, we are talking about doing a Mexico retreat at the end of January next year, because I'll have my new condo by then. So Rosie, you and I will have condos, and we'll have matching condos in Mexico. Yours will be in Cabo, mine will be in Marina Vallarta.
That's exciting.
That's what I'm working towards. I'm not spending another winter in Canada. I refuse. All right,
Nice.
so I think what we'll do is I want to give Cheri lots of time, and then we want to have lots of time for questions. So let's jump right in. So for those of you who don't know this wonderful woman who's going to be presenting to you tonight, I am sure if you've been following WREN for longer than even 3 days, you've either heard us talk about her or seen her on the website or seen her post something. So Cheri Crause has been a supporter of WREN pretty much since it started. We started our relationship way back with having Cheri and Rick join us at an event at the Laura Point Inn. And then they joined us at the expo, and then it's just our friendship and relationship has just grown since then. Of course, Cheri has developed rentals in Langford with her partner and husband Rick, and their partners and friends at DBS Services. 100 rentals, Cheri, is that right?
Oh, yeah.
Yeah.
I would
So
say
over 100.
Yeah.
So she's built over 100 rentals in her community and has been an award-winning realtor for many, many years, and also has a background in seniors advocacy, tax accounting, and financial planning. So
Yeah.
what are you going to do when you retire, Cheri? Are you going to go back to school and become a doctor or something?
I know psychology interests me.
Okay, there you go. Cool.
But no, I don't think so.
No, you're going to actually retire.
Well, I don't know. What does retirement mean these days? What does retirement actually mean?
Yeah.
So I like to think it's it's a transitioning to not having to work, but I've kind of been doing that already. So yeah.
Yeah, there you go. Cool. Well, I don't see Cheri slowing down anytime soon. So
Not really.
No.
Even Rick says to me, he's like, "Oh, you don't idle well. Do you have something to go do?"
Learn to idle.
I don't idle well, but I do. I have to say that I enjoy playing, but I need to leave town to play. And finally, I've been able to leave town. So I kind of have little breaks, like every 6 weeks or so, I'm gone for 5 days or whatever. So that's been working well. That's very sustainable for me.
Awesome. And of course, this year, you and me and my mom are going to Nashville, St. Louis, Missouri to see Keith Urban, and Memphis, Tennessee. So that's going to be super fun.
I know. I'm really looking forward to that. So.
Oh, and Julia says she has a new motto. She's not retiring, she's rewiring.
Oh yeah, that's a good idea. Yeah. Rewiring.
Yeah, I'll be rewinding. That's what I'll be doing. Garçon, rewind me, please.
Yeah.
Because I'm drinking tea tonight. All right, Cheri.
So I
have the power. You can share your screen and
so I just want to say a couple of things before I do that.
Yeah.
One is when I share the screen, I can't see everybody. So I'm going to rely on Liza to let me know if there's somebody that's urgently, waving their hand or something. But generally, because I'm going to cover a lot of data, but write down your questions, put them in the chat. We'll have lots of times for questions at the end, but I prefer to take them at the end this time, so I can make sure I cover all the main points I want to. So
Okay, and I'm
that's-
gonna ask everybody to just mute themselves as well, so that we don't hear any barking dogs or screaming children in the background. And I'm gonna do that too. So take it away, Cheri.
All right, I'm going to do that. So we're going to talk, and of course, Greater Victoria is my real area of expertise as far as the real estate market goes, but I have a fairly good handle on BC in general, or parts of BC. But anyway, we are just going to go through a bunch of slides and information. So, oh, what do I do here to move to the next slide? Why is it not moving? Oh, there, I finally got it to move. There we go. So obviously we're real estate investing right now in headwinds, and we all know what that's like, especially today here, because there's a lot of headwinds. We're looking at inflation, interest rates, supply chain issues, property prices, labor supply, tenant issues, and of course, government. And so tonight oops, I'm going the wrong way. I'm going to get this yet. Okay, real estate investing headwinds. We're going to try to get the wind coming at your back instead of you having to walk into it all the time. So that's where we're going there. So obviously it can be very confusing, right? If you're looking at headlines, if you're listening to social media, if you're listening to the news, all that sort of stuff. So all of these things will just make you go a little bit squirrely, right? So, yeah, we just want to try to get you away from all that. Oh, if I learn how to go the right way, it would be good. So I'm going to address 14 questions today. How is real estate a tale of two worlds now? What are the issues facing tenants? Is household debt a concern to investors? Is now a good time to build? Is government helping the situation? How are demographics affecting the market? Why is the Victoria market an anomaly? Is the Victoria inventory problem over? Is immigration a big factor in Victoria? And is the market cooling? Where are prices going? Should you be focusing on positive cash flow? What's the best strategy for investing now? And will I stop with all these questions? But these are the main questions that I'm hearing, and I hope that that resonates with what you guys have been thinking and where you want the questions. So, oops, now I go too fast. So, how is real estate a tale of two worlds now? We really are situated with the haves and the have-nots, right? And the haves have higher savings, no or low debt, job or income security. They own real estate, not hugely impacted by the pandemic overall. And the future looks okay, not necessarily great. I wouldn't say that we're looking great. And the have-nots, of course, are kind of the opposite of that, right? They have no or low savings, they're higher increasing debt, no job or income security, primarily renters, actually. They've been more impacted by the pandemic and what's happening, and the future for a lot of them looks very bleak. Oh, I did it again. My finger wants to go the wrong way. Okay, so inflation is adding to the increasing schism that we see between the haves and the have-nots. And this is a scary statistic that I pulled up, that 50% of Canadians are just $200 away from insolvency. And 31% right now in a survey done can't pay their bills in total. And part of this right now is the after effects of the pandemic. We were buoyed during the pandemic because the government kept printing money and giving money to people. And so they kept thinking they had money and they spent accordingly. Now, conversely, we do have stats that show that more Canadians have money in savings, but when you had no savings and now you have $300 in savings, I don't really consider that to be a safety net. And now that the travel is opened up, et cetera, we're seeing less of that actually happening. So there's been a definite gap rise between the haves and the have-nots. So what are the issues that are facing tenants today? Because a lot of tenants are people who can't afford to get into the market, and not just in Victoria, but anyway, or anywhere. And so they're paying more for everything, and inflation rates are soaring beyond predictions. You know, what they post is the inflationary rate, we all know isn't real, because it's much worse than that, because they don't take so many things into account. And people make a big deal over gas prices because it's just an indicator. Gas prices are an easy indicator of what's happening everywhere. And so our gas prices are taking huge leaps. Well, everything's taking huge leaps. If you've been to the grocery store later or soon, or later, what am I talking about? Been to the grocery store recently. So why even falling prices won't make housing affordable anytime soon. And Victoria's rent is expected to rise 10% in 2022. So if people think that it's not good now, it's not good later. So this is sort of what it looks like for tenants. Tenants are priced out of their current rental, so they look to move somewhere else. So then a tenant gives notice elsewhere in town and a vacancy is created. But then a landlord gets a vacancy and asks for market rent given inflationary expenses. Their expenses are going up, they have to ask more. So the tenant can't find an alternative affordable rental in town like they thought they would. So it forces them to move out of town in order to make ends meet. And then vacancy is taken up by a new city resident, usually a migrant or somebody who comes in who can't afford the rent. It can work another way. Tenant is priced out of the current rental and looks to move elsewhere. A developer creates a new rental apartment vacancy, but the owner of the new building asks market rent given it is brand new. The tenant can't afford an alternative affordable rental in town. They're forced to move out and vacancy is taken up by somebody else coming into town. I think that it's important to sort of look at the fact that, you know, there are a lot of tenants in town right now here in Victoria that are paying under market rents. They might be paying $800 for a 2-bedroom that normally would rent for probably $1,000 more. If they are forced to leave, or they think that they're going to find something and give notice before they found it, they're never going to find something at the price that they're in, right? So if you are looking as a tenant, not a landlord, but if you're a tenant and you're looking, their best bet right now is to find a purpose-built rental and stay there long-term. That's how they're going to ride out and not be forced into having rental increases beyond what the government dictates you can. Affordable housing. Liza already commented about the meeting they were at, that they're changing this to not affordable but attainable, because more than 100 affordable new homes are for sale in Victoria, but you have to have an income. You can't have more than an income of $118,440 a year for 2 bedrooms. And if you want anything for 2 bedrooms or more, it's $168,000 is what you can earn in order to get into affordable housing. Now, when we think affordable housing, we're usually thinking low income, right? We're thinking, oh, you know, it's the bistros at Starbucks and all that sort of stuff. Well, guess what? They're never going to get into affordable, what's called affordable housing here in Victoria. Not going to happen. Is household debt a concern to investors? And I found this very interesting because this is the percentage of people with credit cards. Canada is #1 in the world for the amount of its residents that have credit cards, 82.58%. That's huge. And it's fine if you can pay off your credit cards every month, but if you're carrying credit card debt, the interest rates were already extremely high. Now that interest rates are rising, what do you think that's going to do to the credit card debt? The interest rates on that are going to rise. People are going to be paying 25, 26, 29, over 30% on credit card debt. And so many people have credit cards And then we look at basically household debt to GDP. Canada's number 3, right? 108.8 to GDP. So we carry a lot of debt. And we're a fairly stable country, but you have to realize that there's a lot of people who are going to be in serious trouble if interest rates continue to rise and inflation doesn't get under control. I mean, we're already feeling it. Like, how much more are you paying in gas? How much more are you paying on your hydro? How much more effect does it have on mortgages? And although we're landlords and we have tenants, it all makes a difference to our expenses, right? So it is the great squeeze. Lower incomes, rising prices, tenants are challenged to cover rent. Canadian restaurants grapple with staff shortages and rising costs. These are all headlines that we've been seeing. Everywhere you go, people are looking for laborers. But the problem with the squeeze is, right, is that you can't get the laborers at the low wages because they can't afford to live here. Next question, is it time to build? A lot of people talk about building. I've been a developer. We've been involved in lots of building here, but more supply is the obvious route out of the crisis that we have. But many people can't afford to live in Victoria, so there's a labor shortage, right? It's the smaller end services that we can't always get laborers for, right? Nobody's able to do that because sure, they'd love to live in Victoria or stay here, but they can't afford to live here on the wages they get. Land prices have skyrocketed, so the profit margins have shrunk dramatically for building. And that's why you're seeing some projects aren't even going to go forward, even though they finally got the permits and the rezoning and the go-ahead. They can't afford to go forward. The cost of building has skyrocketed. That's inflation. That is strictly the costs of materials of everything is going up. And the pandemic resulted in supply chain issues. You can't get what you need, and everything is being delayed as a result of that. You know, you order something, and at the time you order it, they say, yeah, we'll have it there. And then all of a sudden, oh, sorry, we don't have it. Over and over again, it's just not happening. The City of Victoria eliminated rezoning and public hearings for affordable housing, right? But you take a labor shortage, high land prices, and high costs to build, and supply chain problems, and then you've got everybody, all the tenants going, please reduce the rents you're asking, equals build in the City of Victoria, and you'll notice my little nuts over here. It's crazy. It really is crazy. And the reason why Victoria as a city, the City of Victoria, actually listens very closely to rental tenants who are screaming about affordability and prices is because over 70% of the voters in the City of Victoria are tenants. And so that's a huge amount of their voting population. And so it's very important. So in any city, it's a good thing to know what is their percentage of owner occupancy and tenants will have you get an idea of which way the wind will blow when things hit the council. So Greater Victoria builders say they can't find workers to build new homes because they can't find homes for the workers. They got lots of people who want to come here, but they can't live, they can't find a place to live. I've got lots of builders who are saying, you know, if you have a rental, like let us know, any place we can put 3 or 4 guys where they'd be happy. I mean, if I had unlimited resources, I'd be buying everything because you know that you can have a tenant in there so easy. So we're not building any more rental buildings right now ourselves. And in 2014, this was a house on a 7,700 square foot lot. It cost us $440,000 in Langford proper. So this was in 2014, and we put a 20-unit apartment building on this lot. Today, this is what sellers in Langford proper are wanting. And so, it's weird. Like, just have a look at this. In Langford property, 2.2. And yeah, these are a little bit higher lot square footage, but go down here, these are smaller than ours, 1.59, 1.59, 1.55. Like, this is like ridiculously high from 2014. So what's that, 7 years, right? And so your land costs have gone up horrifically in here, which bothers us, let alone all the other things that happen with supply, interest rates, etc. Langford won't approve anymore a building like Robert's Landing. This was that lot with the house. The numbers only work if you build something quite a bit bigger. And even then, you have a labor shortage, supply chain issues. No builder in their right mind will do a fixed price contract. That's how we built, was on using a fixed price contract with our builder. And they're all cost plus because nobody knows what the costs are going to end up like. So all of these things, like, look at this, like, Shanghai and what's happening in China. They've gone so extreme on the lockdown that there's millions of people that aren't going to the factories to work. And what does that do to our supplies? Because we're so dependent on China for supplies that we can't build here anymore. So it creates more of the inflation and the supply chain issues. And until we either start more manufacturing locally, or China starts to, let people go back to work, we're not done. We're just at the beginning of our problems as I see it. So is government helping the situation? I wanted to put in here, is it helping or hindering? But anyway, of course, we all know, don't get me going too much on this, the BC government is ready to build a new $800 million world-class Royal BC Museum they have just been talking about. And 800 million, even with our inflationary period, is a lot of money. The BC government also passed a cooling off period for home buyers with no idea of how it'll work. They haven't given anybody any directions yet on how it's going to work, how they're going to implement it, how they're going to oversee it, what the paperwork's going to look like. They're saying, well, we're passing this because it makes everybody feel we're doing something, but when they have no idea how it's going to work, we're still running on the same rules that we had a while ago. There's affordable rental housing building on Broadway in Vancouver that's under threat now as they want to densify with their Broadway plan, which is all along Broadway. They want to have huge high rises of housing. But in doing so, they're having to eliminate a lot of their affordable housing. So where do those people go? That's what I want to know. Is if you're on a fixed income and all you can afford is $800 a month, where are you going? Where can you possibly go? Demographics affecting real estate. I like this slide because I like to remind people of where we're headed. The senior population, we often forget about the baby boomers and what's really happening, but they're expecting by 2041 that the senior population will be 63% more than it is now. That's huge compared to what our younger one is, what our, working population is going to be, 63%. And as far as Victoria goes, a lot of those people, they love to come to areas like Victoria. It's been known as a retirement. And although we've had younger people moving here, we still have a larger, older population than any other city. So per capita. So it's going to be really interesting to see how they're going to deal with that, because one of the things about when you have senior population and everybody's retired is that more of those people are on fixed income. So how do they deal with inflationary issues that are coming up? Those are all things that we have to look at going forward. So rising construction costs throw a wrench in Metro Vancouver's affordable housing plan. Metro Vancouver planning for 1 million new residents, 1 million more people in Vancouver within the next 30 years. And 30 years seems like a long time, but when you look back on the last 30 years, it's gone pretty quick. And 1 million people is a lot of people. So how many new homes are needed in Metro Vancouver? The number is astounding. And even in Victoria, they are needing way more than what they can build right now. I think, what was it? Victoria, just the city of Vancouver, or Victoria, just the city was short 7,000 units. How can you possibly build that in a quick period of time? So, we are in for some tough times, but why is Victoria an anomaly? So I'm just going to go over this slide with you. So because Victoria is both incredibly unaffordable and on sale at the same time. And I have a little note here, the haves own real estate, the have-nots have not real estate. But we look at, this is what our market has done up to the end of April, right? And so anybody locally always goes, oh my God, how can this continue? How are we going to go up? Why is this happening? 52% in 5 years. Pretty awesome, actually. But it's not sustainable, I don't feel. But how are houses on sale when the benchmark price in the core of Victoria is 1.266? Right? How on earth is that possible? Because the benchmark price on Vancouver's west side is 3.6. To sellers there, our market looks cheap, and we aren't the only ones. The bulk of our people, which I'll get to later, that are coming here, Vancouver, Alberta, Ontario. Okay, so just to give you an idea, this example in Vancouver was listed for 3.688 and sold on April 10th. 1,763 finished square feet, only just over 7,700 square foot lot, sold for lot value. That's how it was advertised. Sale price was 4.1, 412,000 above the list price for that in Vancouver. The survey lists Vancouver as the most unaffordable city in North America, and it is third least affordable in the world. Only Hong Kong and Sydney are more unaffordable than Vancouver. So many markets in BC are affected by the spillover from Vancouver. People from Vancouver that can't afford to live there, or they want to just cash in because they can sell for such a big price and retire early, or pay off mortgages or buy mortgage free and have a better house, they're moving to outlying areas. And we've seen this because the markets in Kelowna, Kamloops, everywhere on the island have just skyrocketed over the past 2 years. And the reason is that people are moving further out from where they've been to take advantage of the higher prices we've had. Is Victoria's inventory climbing? Yes, but we're recovering from an all-time record low. So have a good look at this slide. This is December, where we hit the lowest of the low. This was last May 2021, and this is where we are now. So you look at this and you go, well, isn't that amazing? We're having so much inventory come onto the market. This is incredible, right? Look at this. This goes from 1996 to April. So this is April inventory from 1996 every year until now. So it puts this inventory in perspective. It's one of the lowest ones we've had, let alone December. Isn't that kind of put it into perspective? People are going, oh, inventory is going up, blah, blah, blah. Sales are going down. It's because we have nothing to sell. We have nothing to sell. So we can absorb a heck of a lot more inventory before we're going to saturate demand. Is immigration a big factor in Victoria? You know, there was the big announcement, federal foreign buyers ban, right? But it'll do nothing in Victoria. So we say no, because traditionally we get a mere 3% of the international immigrants to the province of BC. I'm not talking about Victoria. I'm talking about the province of BC. So what does that look like if we bring it home? Here we are. This is the first quarter of this year, 2022. This is Vancouver, Lower Mainland at 12.76. It's where a bulk of our people come. Alberta, Ontario. This is our immigration. Like, look at Asia. Everybody talks about, oh, Asia immigrants, blah, blah, blah. 0.2%. 0.2, not 2, 0.2%. We do not get a lot of immigration here. If we look at the full year of 2021, from Asia, it was lower. It was 0.11. But the bulk of our movement actually happens within the city always. But you can see like Vancouver, Alberta, Ontario, those are the bulk of where our people come from that are migrating. So countries for immigrants, they rate Canada, ta-da, it's number 1. Always interesting. So the bulk of the new Canadians settle in Toronto, Vancouver, and Montreal. And what Victoria gets and what drives our market is we get the offshore buyers from Vancouver. That's what keeps our market moving so fast and the prices going up. So is the Victoria market cooling? Don't you love this answer? Yes and no. So it all depends on how you look at it. So there's more supply right now than there has been, but inventory is still low. Can't stress that enough. There's definitely less froth on the market, meaning there's fewer multiple offers. You can get an offer now with conditions sometimes. Sellers will still take an unconditional offer over a conditional one, provided the price, sometimes they'll go with conditions because the price is so much higher. But by and large, fewer multiple offers, you can have conditions. First-time home buyers are still finding access to the market very difficult here. The interest rates have hit them the hardest. You have to qualify, has to be so much better. They don't know whether to do variable. Can they afford to do variable? Do we lock in? They all kind of freak out a little bit. And so in some cases, it's almost like if you're a first-time home buyer and you don't have a parents with some money or somebody with some money, you're in a tough spot in Victoria. I hate to tell you, but you are. And there are people that just can't afford to live here. So sales are down over last year, simply because we don't have the inventory. That's the number one reason. But prices aren't really going down, as you saw earlier when I talked about 71% of the sales are at or above list price. I wouldn't say that we're, in a declining price mode, but it's still a seller's market. It's going to take an awful lot to move that from a seller's market to a buyer's market. It's going to be a lot harder. Or not, it's going to be harder and it's going to be longer before this moves to a buyer's market, but it will. It's just in the meantime, what do you do? Oops. I thought I told this earlier, but I guess I didn't. So in Victoria Core, there were 71 whole houses that sold May 1st to May 15th, right? Sold for full price was 12, sold above list was 40, for a combine of 73.24% of all sales then in the last 2 weeks have sold at or above list. So then I thought, well, let's look at Nanaimo. Let's see what Up Island is doing. Maybe it's slowed there, right? So they sold 65 and 7 were sold for full price and 33 were sold above list for a combination of 61.54%. So I don't think that we can say this is a slowing market. There's always been properties that sell below list price, but the bulk of everything is still selling above list. Now, you might say, well, I've noticed some properties have been on the market for a long time, and there's been some now where we've seen price reductions. And my response to that is they priced it ridiculously high to start with. That was just a greed play by the seller. They think, well, you know, my house is always better than the ones that have sold. So obviously it's worth more. So we're going to ask this. And there are realtors out there that go, oh, okay, I just want the listing. I don't care if it doesn't sell. Yeah, not really. But anyway, you do have sellers out there that are just going, well, I should be able to put whatever price I want on it. And I remind people that basically the buyers might be desperate, but they're not stupid. And they kind of know when they've hit the range. Plus, people have a definite thought to how much they can afford or what they're going to qualify for. So where are prices going? Likely further up, but not dramatically. If anything else, we're not going to really see them drop. I feel that they might level off. Hard assets, which is real estate is considered a hard asset, they increase in value with inflation. And why do they increase with value or in value with inflation? Is because they keep pace. The prices keep going up as your buying power of the dollar goes down. So hard assets always increase in value with inflation. It's a really good asset to have and to have money in during an inflationary period. And despite the number of people who could not afford to buy a home in Greater Victoria, limited supply and a healthy demand is making affordability irrelevant. More than enough people can afford what's for sale here. Even though increasing immigration numbers will put pressure on the country to create more housing, the costs involved will continue to exacerbate the shortfall. The housing crisis will continue. I do not see that ending in the next few years. There is a housing crisis, and it's going to take a long time to fix, if it can ever be fixed, to be honest. So, is cash flow the biggest thing to consider in a renter or in a rental if you are an investor? And I'm controversial when I say no, because every course that you will take on investing in real estate, they belabor the fact that, you know, you should always be in positive cash flow. If you aren't in positive cash flow, don't buy it. You know, it's really risky, whatever. So I say no, it's not that it's not important. It is important, but it's not the biggest thing to look at or the biggest thing to remember. There are two other ways that your property will increase or create revenue for you. One is appreciation, which I still don't think is the biggest thing, but it's kind of nice. And anybody that's owned property in Victoria, you've had incredible appreciation over the last 5 years. What was it, 52% or something? And that really works if you sell or if you refi, you can get money out. And interest rates have been low. So getting money out has been a huge strategy that a lot of investors have used. But it may not work going forward if all of a sudden the interest rates to borrow that money are higher, right? I think inflation or the rates on your mortgage are going to go up higher than what you can increase the rent for, unless you get your tenant is out and you're getting a new tenant, then you can do market rent. But what the third way that you can earn money, which I feel is the biggest thing, and I think that people forget about it, because real estate investing has been very lucrative over the past few years, that people think that this is the way it is forever. And they think that it's a shorter term play. Real estate is never a short-term play. It's always a long-term play. And you need to always remember that. So the biggest thing that you need to consider when you're looking at a rental is that you have somebody you don't even know today is going to rent that property and they're going to pay down your mortgage for you. They're paying down the mortgage. You're not. You don't even know who they are. They're strangers. And they're coming in and they're going to pay down your mortgage for you. And if you own a property over a period of time, I bought a property in 2006. I now own $40,000 on it. Right? Now I didn't start at 600,000. I started at 134. But still, have I put any money into that property other than a little bit of maintenance? I've spent less than $10,000 on that property over the course of time I've had it. And that mortgage has been paid down. That equity is mine. So what did I do? I got a line of credit on that property so I can access the equity when I want, which will help me buy another property. Or if I'm worried about where inflation is going or whatever, I may just let it be. But somebody has paid down all of that money for me. And I think that we forget about that because we're looking too short term and we're not looking long term. That, oh my goodness, I'm going to have a paid for house. And I didn't even really have to do much to do it. I've been providing housing. My tenants are happy. I take care of things when they let me know there's a problem. I feel that I'm a good landlord. I'm not a slum landlord, but it's beautiful to have properties be paid down like that. And that, I think, is the biggest consideration that people overlook, is that somebody you don't know is paying down your mortgage and contributing to your equity growth. So that is my big thing there, my little soapbox. So what's the best strategy for investors now in our market, trying to make the market irrelevant? Or what's going on? So it used to be, you know, people would be buying pre-sales because the market keeps going up. We don't know when the markets might shift on that with higher interest rates. Do the numbers work in larger markets, etc.? People would flip and very successful for flipping in the last little while because we had such an appreciation. But what if the market's not appreciating so much, right? So right now in Victoria, if I'm being asked, what's the strategy for investors now here? You buy and you hold. Your rental market is incredible and people will pay the rents that you're asking for. You know, you do your due diligence on your tenants, but you will get good tenants. They will be paying down your mortgage. You ride out the interest rate scare. You eliminate having to build and take on risks of inflation and supply chain issues, etc. You buy, you hold, you ride it out until, because this is also very cyclical. Anybody that's been around, and yeah, I'm probably the oldest one on this call tonight. You know that things are cyclical. We've had a good run, longer than we expected as far as low interest rates, blah, blah, blah. But interest rates go up and they don't have to go up to 18% that we saw in the 80s because we started at a much higher rate. They only need to go up to 5 or 6% before people are screaming and in serious trouble. Because if they're already living paycheck to paycheck, when all of a sudden your mortgage goes up by $300, $250, $300 in the course of a year or so, where do you take that money? Where do you get that money from? It means something else has to, you know, not so much Starbucks, right? But we're talking about a lot of people who are going to be feeling it hard when it comes to, you know, just the basics. Fueling your car, having transportation, your house, it's affecting everything. So when you can be out there and you can hold, provide housing in the meantime, and then basically ride out the storm until the cycle shifts again, right? That's really what you're looking at doing, is how do you ride out the storm? It's a storm. There's headwinds there. How do you turn it around so that the wind's at your back and you're riding it out and you're coasting, right? So that, in a nutshell, other than it's also time to invest in yourself, right? Educate yourself. Take the time now to, what do I need to do? Personal development. I'm a big believer in personal growth. And sometimes we get all caught up in, oh, I need to learn about real estate, but we're not learning about ourselves. We're not learning how do we deal with stress situations? How do we cope better in harder times, etc. So I'm not saying, and I hope that my presentation doesn't come across as negative. I'm hoping that it comes across as just a reality check that everything is not always roses. Everything is not always, oh, look at how much money I made this year. You may have a year where it's, look, oh, I'm just grateful I didn't lose money, right? Like you may have a year like that. Like anybody that's been in the stock market right now, it's been a rough first quarter. And I think we're just starting to see, but take the time to invest in yourself, to learn how to cope, to feel more confident and to feel calmer and not have all this anxiety. So invest in yourself, educate, and that will be a huge plus. So anyway, that's just me, although I have 2 team members that are not on here, but that is basically my presentation. So I'm going to stop sharing and I want to go to questions. And then if I need to address something in the slideshow, I can. But
Cheri, that was fantastic.
Thank you.
I think, I mean, I made so many notes, and I know we're going to get to questions, but, you know, a couple of things that really stood out for me. Long term, like I wrote that down almost right at the beginning of your presentation, because that was the message that I was getting. And I think that, you know, being someone who's lived overseas and lived in Sydney and lived in Toronto, I always look at Victoria as it is one of the, and probably everybody on this call has heard me say this, it's a vanity market. It's one of the best places to live in the world. And the fact that people from other more expensive vanity markets like Toronto and Vancouver are moving here means, yeah, the stability over the long term is going to be there. When you look at Sydney, Australia, you know, did the prices in Bondi Beach go down? Not very likely, because the people from people who have money from all around the world always want to live there, and that's what Victoria has reached now, and that's been part of where we've come in terms of our tourism, in terms of the lifestyle, in terms of, you know, now that people are working remotely and can choose to work anywhere, people are choosing to live in a place like Victoria. So people who have money are going to continue to move here, and that's where the prices are going to
and and the people who don't have money will move to areas like Duncan or Ladysmith or something else. I mean, they still want to move and enjoy some stuff, but they may not be able to afford exactly what Victoria has, right?
Yeah, and more remote work means that, you know, people who can't necessarily afford to live in the city may be able to work remotely and live in Duncan or Souk or some other place that's a little bit affordable and close by.
Exactly. And you know, I just really feel that so much has happened. If you watch the real estate investment communities over the last little while, like I do think that a lot of people who've only been in the investment game for 3 or 4 years think this is like the best thing since sliced bread and it's easy money. Well, guess what? There are times when it is not. I've been investing since 1997. I went through 2008. I had to sell some properties in 2008 just to stabilize, because we had leveraged so much and everything was going crazy. And then all of a sudden it's like, ooh, what just happened? Yeah.
And the other word that I wrote down was creativity, right? Because I think, you know, there's still lots of opportunities in the market. You just, need to be more creative. And of course, collaboration. I mean, we always talk about collaboration. Why get into the single family home market in the most expensive cities in the world when you can buy an apartment building in Campbell River or a mobile home park in Texas, or whatever it is? You just need to look at being creative, and this is where getting outside of your geographic area can be helpful. We've had quite a few people looking at Edmonton, so it's interesting, interesting to be looking at the economy of some of the other cities. Edmonton, Alberta used to be a one-horse town, and now there's lots of information that they're adding more technology, more green jobs, and so the economy's changing there. So cool. Okay, so let's go through some of the questions. Anybody want to unmute and just jump in? Lori, you unmuted. Did you have something to say?
Yeah, no, thanks,
Yeah.
Cheri. That was a really great presentation. For those people who still have a lot of equity sitting in their homes, would you still suggest accessing your equity to put it into another property during this time, or do we be a bit more cautious right now with that?
I'm a big believer on during inflationary times that you invest in hard assets. So depending on, everybody's situation is a little different. So without looking at an individual situation, I wouldn't definitely say, oh yeah, do this and put it as a blanket statement for everyone. But I'm certainly not opposed to taking that money. But you just have to be cognizant then, if you are borrowing to buy another property, like most HELOCs, right, are variable rates or prime plus whatever, right? So you got to know that that could move. So you may want to leave your HELOC that way, right, and use that as your down payment. But going forward, and I know there's mortgage brokers out there that'll be screaming at me if they heard me, but a lot of mortgage brokers are saying stay variable, it's always the best. Well, when you're a landlord and you have fixed costs, variable sometimes is not always the best. So if you have variable on your HELOC that you've used as a down payment, but now you're getting a mortgage, maybe you might want to know, for the next 5 years, I don't have to worry about what interest rates are going. Somebody else is paying off this mortgage. Am I really concerned if I lock it in? So then you have the best of both worlds. You have a part that's locked in that you don't have to worry about what inflation or how fast the interest rates are going to go up. Maybe you only lock it in for 3 years, and then you have your variable component. And, because we don't know how fast the rise of interest rates is going to stop and reverse. You'll hear different things. And so what I've done, because it's always a question that as a realtor, we always get asked variable versus fixed, and it's not really my expertise, but I'll go to other people who might give a different perspective, because every mortgage broker I've talked to has given me the same answer. Stay variable, stay variable, stay variable. But I've gone to commercial lenders who don't deal in residential. And I said, what's your perspective for a residential buyer, even though it's not your particular thing? I've asked financial planners, what are you advising clients to do? And that's where you get a different kind of, a little bit of a different perspective with maybe you need to do one or the other. How do you hedge your bets? How do you weather the storm best? And how are you as an individual with uncertainty? As an individual, if things get uncertain, are you panicked? Are you losing sleep at night? What are you doing? And I think you have to look at that too. For some people who are really, they don't mind about risk and they can sleep through anything, it can be blowing a gale and a hurricane can be happening and they're still sleeping, then maybe variable's fine for you. But you have other people who have anxiety and they're, they can't eat and they're worried about it. And oh my God, I'm just going to sell. Like, no, fixed is probably better for you. Right. So that's just my idea there.
Thank
you had mentioned about Langford prices on those properties. Had they sold? Some have sold, some haven't yet.
Yeah, it's incredible that you what was it, Cheri? 475, and then some of them are like at 1.5 million.
Yeah,
it's just crazy.
Same size of lot.
Steph, you put your hand up.
Yeah, I mean, no, interestingly enough, most of those properties are on my block, Cheri, but that's a
I
whole
know
nother,
there's a lot on Scaife that are
that's a,
ridiculous.
that's a whole
greedy.
nother story. No, my question was just the one I posted there is, are you finding people are still shopping with a rate hold that's lower, and has the new rate really kicked in yet, or are we still gonna see that in the next month or two?
We'll still see that in a month or two. I think the lowest rate that increase we can expect on June 1st is 0.5. It might be higher. I don't think it'll
Wow.
be lower than 0.5. So if you get a rate hold, the rate hold is usually good for 90 days or 120 days, a rate hold. You may see, depending that those times may shorten, like who is offering 120 days may only offer 90 now, because the banks are nervous too, because they don't really know. Nobody really knows. And we have a big unknown that we didn't talk about tonight in any great detail, but we have war happening in other parts of the country, and that can be a total wild card, right?
Yeah. Yeah,
So,
and it's impacting people. I mean, one of my close friends, you know, his mortgage went up $400 with the last bump, and if it bumps again the same, that's another $400.
yeah,
And his gas costs have gone up $200 a month. So that's $1,000 of after-tax money for that person.
yeah,
And he's also in the middle of a renovation that's gone over budget. And you know, so you combine all those things, and that's when somebody gets in, you know, it's a lot going on.
yeah. So, getting back to Lori about, do you buy or not buy? Some people may want to wait for 4 or 5 months to see what's going to happen, because there may be some people that need to sell. And I'm not saying that you go in and that you gouge them, but we might have more inventory on the market just because people can't afford to stay where they are.
Right, like you said, you had to sell a couple of properties at one time yourself.
In 2008, yeah, we did.
Yeah.
And were they hard to sell?
No, they weren't hard to sell. I won't say that they were hard to sell. I mean, it took longer than it does today, but they weren't hard to sell. And I didn't, I wish to God that I could have kept them, but it was about stabilizing the boat, right? And rather sell 2 properties than lose 4 or 5, right? Yeah.
So a couple of other questions. Allison, for lots of talk on pre-sales right now, right? There's some people who are saying, don't buy pre-sales anymore. And we just did our chat last night for those of us who own the 11 of us who bought 4 pre-sales in Langley. We were looking at our numbers. We bought one of the pre-sales of 500,000 in December. And the most recent pre-sale for a 2-bedroom in Langley was $699. So, on
Yep.
paper, it's increased by $200,000. So there's,
Yeah.
there's still, and again, and that's where I think the collaboration comes in, right? Like that.
It does. You lower your risk factor, number one. Number two, you're looking at if, when you close, that you're able to use Airbnb or short-term rental, which increases the amount of revenue that you're able to make, right?
And so Allison's question was, do pre-sales have to be completely paid for before they can be assigned?
No, so you can assign a pre-sale. The idea of assignment is that it's done before you close. So you have an accepted offer. Let's say you have an accepted offer today. The property isn't expected to close until the end of the year, let's say. So you can list it now and put it out there and look for somebody who will buy it, the contract off of you. So let's say, for easy figures, your contract is 100,000 and somebody will pay you 110 or 120 for it. You make the profit on that. So they give you the addition and then they close on it, etc. That can be a bit dicey in this market to actually assign. So you never go into a pre-sale without knowing that if you have to, you can close on that property. Trust me, that was a very hard lesson I learned. And I got stung badly. And it took me 10 years to get out of that property with any dignity. So yeah, we make mistakes. But
Yeah, we
So
made sure that we had mortgage qualifiers on the
yeah,
team.
exactly. If you can close on it, sometimes it's better. Colvin, my son, did a pre-sale in Langley, and we closed on it, and then we listed and sold it before we rented it out. Like, just closed on it, sold it. We came out making a profit, even though we had to pay the property transfer tax, but we had tried to assign it, and I wasn't too hopeful. And of course, it didn't assign, even though they tried their best. But so we closed on it because we knew we could, and then we sold it. And so you can do it either way. But if you close on it and subsequently sell it, it's not called an assignment from a legal point of view.
Just a
It's only
regular sale.
assigned if you do it before you close.
Cheri, I have a question.
Sure.
I'm curious why you couldn't find a buyer to assign it, but you had no trouble selling it after closing. Is
Yep.
it because it's a different kind of buyer? I'm guessing that
Yes.
maybe selling it after closing, you're selling
Yeah.
it to somebody who's going to make it a primary residence, whereas somebody buying an assignment would be more of an investor.
Yeah. So what happened for us, I mean, it was we used Kelly Fry team, right, in Langley, and we had done the pre-sale, and it was a really good pre-sale. Assignments were really happening for them at the time, but when it got closer, because we bought at the very beginning, so it was almost a year and a half before it would close. So we were only looking to assign maybe 6 months before, and they had had a
Yeah.
lot of success with that. And then, you know, it just sort of tapered off a bit. And, you know, part of that is there was lots of other projects to buy into, et cetera. And yet then when we closed and we put it on the market, it sold relatively quick, and it sold at a good price. But I think it's like you said, who bought it was somebody who was moving into it and looking for a home. Assignments can be a bit complicated, and your average Joe on the street may not understand it. Their family or their realtors might not understand it, and they go, whoa, you know, you might not want to do this. So I think that was a big factor. But, you know, assignments, we certainly had them try to assign, you know, but I knew from previous experience, which was a negative experience, that, you know, we had to make sure that you could qualify and close. If we couldn't assign it, it wasn't the end of the world.
Right. Okay, thank you. That's really helpful.
Okay.
Cool. And just going to go through the some of the other questions. And if anybody has a question, just feel free to unmute. Lots of good comments. Love the presentation. This is reality. Yes, Julia, it certainly is. Elena.
Can I ask a question,
Great.
Cheri? Well,
Oh,
once you
yes,
go
yes,
through that,
certainly.
Hi, Karenisa.
I think I heard from Kyle Green that for pre-sales, I mean, we're way too ahead of this, but he did say, I believe, if you can, and I don't know if you know, that you can actually have a locked-in rate for like a year out for pre-sales.
There are some programs out there on pre-sales. Yes, it's true.
Okay.
Where they can lock in your rate. And it's been that way. How long that program will stay open, anybody's guess. But
Okay.
if you do get that locked in rate for a year or whatever, that's great. But be aware, and again, it's just being aware and assessing your own risk tolerance, is that with things happening and there being delays, you may think it'll be done in a year, and it might be a year and 6 months. So will that rate hold be extended or not?
Right. Okay.
Yeah, but there are programs
though.
out there, and it's
Yeah.
way better than it used to be, because you didn't have a rate hold for that long.
Yeah.
And that's what got me on the bad experience I had, is we couldn't get a good rate. Yeah.
Mm-hmm.
So that'll be
Okay.
something that we can talk about the next time we catch up, is
Yeah.
depending
And
on
also-
where they are on track, if we decide to do, you know, try to do a rate hold, depending on where we are in the process.
Yeah.
Mm-hmm.
And the other tip for that is make sure that for any of you who are self-employed, well, or if you even have T4 income, that your taxes are done well in advance of having to close on that property, because they're going to want your NOAs and every detail possible. It's not a time to procrastinate on getting your taxes done.
And that's just a good all-round tip for people who are real estate investors anyway, right?
Yeah, yeah, yeah. I remember I was only a realtor for maybe a couple of years, and I dealt with this client, and everything was going along fine, and they removed conditions, and then all of a sudden it was like, oh, I haven't filed my taxes for 2 years, and I have to produce an NOA before closing. And I'm like, holy crap. Like, it takes 6 weeks. Like, they didn't email outside of the normal, or e-file outside of the normal season. And it's like 6 weeks to get a turnaround. And I was like, oh, yeah. So we had to really pull some strings and do some dances. And so that was the first time that I was aware that there are people out there that don't really file on time and still think they're getting a mortgage. Yeah.
Go
The
ahead, Judy.
lessons we learn.
Anybody have another question?
No, I'm good. Thanks,
You're good?
Liza.
Cool. No
Yeah.
worries.
There
There
are
are
still opportunities out there. Like, I'm, selling properties here all the time, and there's still good stuff to be done in Victoria, but it's not for those on a string budget.
Well, and Stefan and I are looking at 2 right now, aren't we? That might, Catherine, you and Steve might be excited about these ones.
Yeah,
So,
nice properties,
yeah.
both of them.
Yeah. So one's an 8-unit apartment building on Gonzales.
On Gonzales area,
What is it,
close to the
three
beach.
and a half.
Mhm.
And then the other one is a 12-unit character apartment building, North Park, is it, Cheri?
Yeah.
Yeah, so a 12-unit apartment building in Victoria for 3.8, and there's our BFF mansion that we're all going to move into together.
Mhm.
It's a BFF super character place.
Yeah, has a lot of character.
Yeah, and Karenisa, you had found a couple places in Edmonton that a few people are looking at, and you had also found an apartment building in Vancouver that was sort of kind of interesting, I think, too. But what was that one again? Was it 6 units, or unmute for
Oh,
a
you're
sec?
muted. There.
I believe it was 20 or 24 units.
Yeah.
And it was a character building in Strathcona, which is where the new hospital will be.
Was it 8
Close to
million?
Yes, it was, I think it was 8 million. So it worked out to 350, about 350 a door.
Yeah.
And there were a good mix. I think about 10 or 11 were 2 bedrooms, and the others were 1 bedroom. So it was a good sweet mix. And but I don't know, I didn't know any of the details. It was already sold when I saw it for that price. But yeah, that seemed like, I mean, I don't know the condition of the building. I know the cafe that's below, that's why I recognized it. I'm like, oh my God, I know that cafe. And it's a really nice looking building.
Yeah.
But I don't know any of the other details of the building itself. But yeah, it was interesting.
And that's, something like that is, possibly down the road. And I think, right now where we are with the group, we could do a $4 million building. I mean, there's enough of us in the group that we'd be able to make that work. And then of course we're hot on the mobile home park thing again. So Stefan and I just have to look at some numbers for a park that Joan took a quick look at, and Cheri sent us over some details, and if it looks good, we're gonna tie it up. And yeah, maybe tie up one of those apartment buildings, see which one looks better. But Catherine, we'll send them over to you, because I know you and Steve will be interested for sure. Yeah, lots of other things that I wrote down, but creative, long-term. Cheri, I really like your point about cash flow. I might have to use that when it comes to selling Belmont. Lori is on the call here, and of course Joan keeps saying, we don't want to feed the beast. We don't want to feed the beast, But
it's not so bad if you have to feed it, provided you have an income stream to feed it. So for me, because I wasn't a full-time investor, I had a job and I was working, and even though it was for myself, but I was earning income. So to have to feed something for a while was okay when I knew that it was only wasn't forever, right? It's not forever, but I knew that I could afford to do it. Was it worth taking the risk knowing I'd have to feed it $170 a month for 3 years? And I looked at it and I thought, yeah, I can do that. And I know a lot of people who shy away from that, but we made a killing on that property.
And it's that mortgage pay down, right? People, like you said, people forget, like someone else is
Yep.
paying, if not all, most of your mortgage. And then if you're in a market like Victoria and you do end up holding it for a longer period of time, then chances are, you're going to see some decent appreciation. So
Yeah.
it's just good to be reminded of all of the factors, right? Like even though
Yeah.
we're in a challenging time, we all know there's still opportunity, and
There
going
is.
in on
And
something together and not looking at what every single other person in the market is looking at, right? So that's why
mhm,
looking at apartment buildings, looking at mobile home parks, looking at fourplexes, right? Because 99% of the people who you're competing against are looking at single family homes. So a single family townhome, a single family condo, or a single family house. So if we take ourselves out of that, then we have way more opportunity, and we just increase our chances by so much more to get into something that's interesting and over the long term going to be a good investment.
yeah. No.
Can I
agree.
just add to Sherry's comment there? By the way,
Yes,
Sherry,
Julia.
hey, how's it going? I absolutely loved your presentation.
Oh, thank you.
In the sense that there's huge reality around appreciation in BC. And I think a lot of people shy away from it. And you're always hearing in courses like, don't think about it. It's a bonus. It's a bonus. But the truth is, if you play your cards right with that bonus, you
Yeah.
can do very well. And to the comment that you made about putting some money in, I bought a property where I was putting $25 in for the first year and some, and our rental cap rates didn't help me. But I also looked at it like I could be putting $25 into this when my tenant's putting a few $1,000s into it, or I can be putting that $25 a month into an RSP. To me, I'm like, what weighs what? I would have been investing into something anyways, right? So it's not a loss. And like you, I could afford it because at the time I was full-time and whatever. And so I think it's perspective. It's like really looking at things and saying, like, where else would you have put that $170? Where like you wouldn't be tossing the $170 anyway. So the fact that you're putting into something that in a year or two is tripled over,
gonna go up.
yeah, you can't complain. So I really have to say I appreciate it, because lots of times you don't hear that.
No.
And I think you have to be a realist to what is the market you're in. Because I know a lot of people are super hot right now in Alberta, but their prices are a bit ridiculous. Some of their prices are getting a bit ridiculous because they're going bananas, like saying like we haven't had high prices for a while. So you've got to be careful not to get caught in this emotional component, and have that perspective. And can you weigh it out and all that like that? Yeah. Gold today. I loved it.
I agree. And although Alberta's trying to do stuff to change their dependency on the oil and gas sector, and it's not a sector that's dying, but by the same token, if you're thinking it's going to return to the glory years of Ralph Klein, I doubt it.
Yeah. And actually I was in another
It's gonna take time.
presentation somewhere, and they were talking about they're looking more at markets where the energy is renewable. They're not leaning towards the oil and gas as much as they were. It's not to say that, like you say, it's not to say that it's going to be obsolete, but it's not going to be the only resource, which, typically that's how we've looked at it. It's the big resource, and that's the big driver. But now, we've seen tons of climate change, tons of changes in the world that, other things are playing a factor. Yeah. No, fantastic.
And Edmonton has more stability than Calgary, but right now Calgary's been more depressed, right? So there's an argument for either city right now. And so it depends on what you're comfortable with, what your strategy is. Edmonton is stable. Calgary is more depressed. You have more opportunity for appreciation. And the rental market is closing, because for a while there, the rental market, you could rent anything. Like rental was not a problem as far as vacancy rates, like were high. So, you know, you just kind of have to weigh up, but every market has its pros and cons. You can make money in any market.
And this
Right.
may affect the Alberta market. And this might be old news, but Premier Kenny stepped down. So who knows?
Yeah.
What's that going to
Mhm.
do, right? Who knows what's ahead? There's so many factors with, you know, the economy and government changing over. And
Yeah, and you can't predict it all, and you can't, you know, you certainly can't control it. So how do you make some of those things irrelevant? That's a term Rick and I use a lot. How, you know, when we're assessing a problem or a situation that's causing us a bit of stress, how do we make this irrelevant? Is there a way to make it irrelevant? And I think a lot of times it depends on what you focus on. As far as, oh, you know, this is a problem. Are you looking at it from a short term or a longer term perspective?
So just
And-
before we do wrap up, I'm just curious, because we do have a couple people looking at an Edmonton property right now. How do we feel about Edmonton? Julia, you've got investments there. Lori, Carol.
I don't have investments in Edmonton. I have investments in Alberta,
In
but I
Alberta.
do have a lot of colleagues that have investments in Edmonton. And so far from what I've seen, some people are even doing flips right now in Edmonton,
Oh,
which
wow.
tends to mean, which tends to speak volumes to the market, if you're getting away with being able to do a flip and profit on it. So yeah, I've heard some very good, people are doing some very good things in Edmonton. Now, they also are people who have like 30, 40 years experience. So they know how to play both sides, right?
Yeah.
So you got to take that. That's a huge factor in Alberta, is the experience of people.
Yeah. And again, that long-term play, right? If you're going to go in, be prepared to go in for the long term.
for me personally, I'm trying to sell everything, and I've got three. Well, I had four. We sold. We're down to two right now. I just sold a property in Chestermere a couple weeks ago. So which made me think that market, yeah, there certainly is some movement. Things are starting to, of course, increase there, and things are looking more positive. We're trying to sell our property in Red Deer, and the realtor there was saying that Red Deer usually lags about 6 months behind Calgary. So they think that they're going to start to see some movement as well. But for me personally, I think there's some amazing deals, but yeah, you got to really understand that market. I just personally been in it for quite a while, that I'm just wanting to get out of it and put my money elsewhere.
Carol, you've got Edmonton, don't you? Oh, go ahead, Judy.
No, I was just wondering, Cheri, you mentioned that Edmonton tends to be more stable compared to Calgary. Is that because of the employment opportunities?
Yeah, it's more because it's a government town.
Diversified employment?
Yeah, it's more because it's a government town, so your employment is more secure. Where Calgary's employment was mostly associated with the oil and gas industry or services thereof. But anytime, and I mean, I often talk about Victoria being stable because of it's a government town and it's a Navy town, right? So there are steady employment regardless of what else going all haywire everywhere. And that's why Edmonton is more stable. And anybody that's invested in Edmonton over a long period of time will tell you that as well. It's more stable than Calgary because of that.
Okay.
Cool. Carol, go ahead.
Yeah, I was just talking to my cousin who was just out here last week, and she's from Calgary, and she said that things are starting to really boom there, because she said there's so many people from Ontario that are buying places there because it's so much cheaper.
It's cheap.
Yeah,
it is cheap.
It's on sale, like Victoria is.
And I have a lot of family in Calgary, and they're talking about how the building, like they're starting to see building take off there, which they haven't seen for a long time.
Cool.
Mhm.
Great. All right. Anybody else have any comments or questions before we call it an evening? A couple people have messaged me and said they're interested in the apartments in Victoria, so we'll get on that. Yeah.
I know. Well, thanks everyone for coming. You've been a great group, and thanks for all the questions. And if you do think of anything else, you know, message me or phone me. I'm happy to chat anytime.
Cheri, that was great information. And
Mhm.
I know Rick helped you put those slides together, didn't he?
Yeah, I did. Yeah.
They had
So
Rick
I
all
sit
over
down and
them.
I kind of say, this is what I want to talk about and cover, and then he goes and finds it. Yeah.
Yeah. Tell him he did a great job on the slides.
Okay,
They
I
got
will.
the Liza stamp of approval. Just for
Oh.
those who don't know, Rick and I have had an interesting relationship over slideshows over the last 6 years. The first slide deck that he ever
Well,
gave me.
if it was a slideshow that I put together, it would have been half the slides.
Yeah,
But,
but at
you
least
know,
it wasn't 284.
No, it was not.
The first slideshow that Rick ever gave me was 284 slides.
And yeah,
Oh.
yeah. But it's you know, if I let him go, he was like partway through, it's like, well, Cheri, there's just so much here. And I said, no, let's just pull it back, because yeah, you can get overwhelmed with just all the information, and you could make a 300, you know, or a 2-hour presentation, but that's
Yeah.
not what we wanted.
And I think, you know, I think even though we focused on Victoria, right, I think we're all, you know, everybody on this call knows that there are, you know, all, in general, a lot of things that we covered
Yeah.
apply to either your market, or there are reasons why you're probably thinking about leaving your market and coming to Victoria, or, you know, looking at other markets outside of your geographic area. So even though we
or
focus-
just even, you know what questions or what information to find out about your market, right? That are helpful.
And I found a really cool neighborhood today, Cheri, that I like.
Oh, where's that?
View Royal, where it's at the end of the Esquimalt Harbor, where there's lots of waterfront houses there. And I drove all through there today, and there's tons of old timers that are slowly getting replaced by super mansions. And it's
Yeah.
pretty neat little spot
Nice little spots in there, actually.
yeah, really
with
nice.
some fabulous waterfront parks,
Yeah.
and pretty interesting. I could see people definitely the value of those going up very high because of
Yeah. People
this-
forget that View Royal has nice waterfront, actually.
yeah, and once people start to realize how central that little pocket is, that's a
Mhm.
pretty nice spot to be.
Yeah.
Yep, that's
View
where
Royal,
Allison
View
is.
Royal is a municipality that is considered to be part of Victoria's core. Like the Greater Victoria core is Oak Bay, Victoria, Saanich, Esquimalt, and View Royal.
Amalgamate, for God's sakes, just amalgamate. It's a whole other topic.
Oh, you know, you
Okay.
make my life too easy.
All right, has everybody had enough?
Yeah.
Thanks for joining us, everyone. Hope that you got lots out of it. I think we all did. And Cheri, thank you for working
Yeah.
with Rick. To
I'm
put
just
such
gonna
a-
put my
Yeah,
email down here,
yep. Pop it in the chat.
and myself.
C. Crause at shaw.ca. And yes, so, you know, one of the things that we've been reminding some of our new members is, you know, remember that Cheri's available to have a chat, and Kelly and Jorian. A couple people have reached out to Jorian, and he's phoned me and said, hey, I've been having some really good conversations with your WREN members. What a great group of people. So yeah, just, you know, remember when you've got some questions to reach out. And yes, if you're interested in anything that we've talked about tonight, shoot me a message. Email's probably the best way to do it, because right now, with all of us having so many different, you know, it's like, where was that message? Was it messenger, text, Instagram, Facebook, phone? So if it comes into the email, then it's all in there. And yeah, lots of fun coming up, and lots of excitement coming up. And of course, we're going to be seeing Julia presenting twice. We're going to do private lending and we're going to do Portugal, the two P's with Miss P. Awesome.
Good.
Yep, excellent. Okay, so
Great.
thank you everybody, and thanks again, Cheri. Everybody have a good night, and we'll have the recording on the Facebook page and on the members dashboard. And have a great night, and thank you so much for joining us.
Thanks.
Yeah.
Thank you.
Bye.
Bye.